chart 2. I'll go to chart 2 now. This is the same share, but what I've done here is actually plotted it against the share price and its trend against its index. So this is what we're seeing on the window above the underlying chart, where there's a line with lime green, and there's a vertical line coming down there, suggesting this is where the share price starts picking up its trend against its index, just at that point there, and that would have got in very, very early on that one. I reckon you'd have got in at around about 18 pence there. So that's the earliest I could get. So beg your pardon, 25.25. That would have kept you in with the volume changeover on the swapo and the added volume of push coming through, and we can that would have taken you. That's the earliest point there. So the thing is with that, Giles, is you can think, well, that's the way forward for picking those sort of shares, and run scans using those formulas to try and pick out another one of that ilk, right?
Yeah.
What actually ends up is this is probably a one-off that probably won't ever happen again. So you're searching for something which will happen once every 10 years.
Yes.
For an investment strategy, it's
not the best,
100% success, but you have to wait 10 years for it, 7 to 10 years for it. So yes, you've got a strategy that works there, but when you're going to trade it, when about 80, 90?
Yeah,
100,
precisely.
So it's a compromise between of sort of wanting the best from a system and getting a reasonable return over a sensible time period, and compromising on time and price.
Yeah. Okay, Bill. Thank you for that.
Yeah.
No, that makes a lot of sense, because you can't have everything, can you? That's...
Well, this it becomes very childlike. Investors can turn into children in terms of emotional stance. I want this, I want that, I've lost that, I don't want to lose that, I want that now, I want this now, I want that. And it becomes very irrational. You get businessmen and all sorts of people behaving very, very irrationally when it comes to money. And because I think it sort of, it touches the roots, it hurts people when they start losing, and actually reminds people of what losses are like, and they can be very painful, especially if they're not used to them.
Yeah. Okay, Bill, thank you for that. Well, let's move on to the next one, which is COPA.
Well, yes, I mentioned earlier that the CRB index, the Commodities Research Bureau index, is actually only up a few percentage points against over the last 2 weeks. It's at 3% up. This is interesting. Copper, as much as we've been told that there might be stockpiling in China, there might be some recovery in American markets, and we said that the housing market won't recover until unemployment usually picks up, and that's what's been the way. And we only had 28 months of misery, and usually it's 43, so it's all very premature. But what we're seeing here is the copper price picking up now, and again, the yellow strip at the bottom there, it's turned yellow, I should say, is indicating there's high volume going in here. So this is rather extraordinary in a sense, because it shouldn't be the case until there's demand picking up. But it shows there is demand here, recovery, and this is what we're not going to confuse trend with recovery here. This is just recovery until we get into a 50-day moving average turning up above the 50-day and the share price above the 50-day and the 200-day. We're not going to. This is just a recovery chart, but the indications are using the inverse Fisher transform on the weekly basis, also suggesting this is the first time this has turned up.
Yeah.
And this is encouraging, and it's worthy of a second look, I think. And with the right stops in place and the right strategy, I think there's a place for this stock or commodity in the portfolios. I mean, there's been a lot of volume picking up there, having had a very, very poor period. The new high came in around early March. There's certainly scope for trading this one up, certainly up to the 200-day at least, which is about 27 on the chart there. And it might well overshoot, as most things do, and it might well go to 30 plus. But it's certainly worth consideration of any portfolio that merits a sort of an exposure to commodities.
Okay, Bill, thanks for that. And finally, KAH. I
think we've talked about this one before now. This is Kalahari Minerals. This is a very interesting story, this one, because it has got a large stake of a company called Extract Minerals, I think it's called, an Australian company which is specialising in uranium searching or digging up uranium or finding uranium. The three places you find it, actually, uranium on the planet, it's Canada, Australia, and parts of Africa. And this is Namibia. And this is where Kalahari's this is where Kalahari is actually based. And this is a very interesting chart. It's where the circle came in early February at about 50 odd pence. It's now 126. It's sort of one of those shares you want to buy when it weakens, but it doesn't want to weaken. What we've seen here is Rio building a stake. We've seen Niger Uranium building a stake, and Polo Resources have built a stake in Extract Minerals. So it's sort of which is based in Australia. So we're getting stake building in here. And this is very interesting, and this is why the volume levels have gone up, and this is why we've seen the share price go up, and it's a company with very, very good news. It's found what is believed to be the largest uranium site on Earth, and of all the commodities that are around, potash and uranium, I'm led to believe, are the ones in short supply.
Right.
So uranium is the place to be. It's only 12% of America is actually nuclear powered.
Right.
It was the bad boy in 1984. Since then, carbon has been the nasty. So this one has certainly carbon free and has a place to play at some point. At some price, this is going to go higher, I think. And some analysts reckon 150, 160 on the thing. What price uranium? I mean, it's sort of it looks very, very good at the moment, and it does until it goes wrong. And that's another discussion as to how to get out of situations when they go wrong. We'll look at that later, I think.
Okay, Bill. Thank you very much for that. Always interesting to talk to you. Thanks for your recommendations, and we'll chat again next week.
Thanks, Charles.